All right, notice what's happening in the Dow. This is exactly the reason why you want to know what the nature of each signal is. See how the Dow's pulled back with a bunch of dojis, which tells us there really isn't any convincing selling going on. But more indicative of the nature of the market is the NASDAQ. You can see how there's a doji, doji, doji back up, kind of a J-hook pattern. So when there's selling going on in one index and not any buying going on in another, at least you know that probably the trend is going to be relatively flat, or at least heading in the slow direction it already was. So this basically tells you there's no change of investor sentiment overall. And again, you can calculate which sectors are going to be strong or weak based upon the underlying commodity. For example, as we can see in crude oil, with it breaking down, it tells us a lot of the oil stocks are not going to be very exciting to trade. When you have the ETFs, like in Labu, shows you there's some biotechs that probably should be looked at. So gold right now has been soggy for the last few weeks. Looks like it's trying to bottom here. And that we also saw in things like Nugget starting to come back up, and JNUG also coming back up. So at least you have a good visual heads up of which sectors might be picking up steam and which ones are selling off. So let's take a look at a few that we own. Right now, this big fry pan bottom set up in GNMX, one of the little biotechs. Backed off today, but looks more like a consolidation day. We'll look for more upside. And CMTL, which also had a good strong gap up over the last few days. There's your best friend signal. And I just finished a 4-hour video program breaking down and explaining in great detail your I guess what you would call your signals and patterns quantified. So I took 12 signals and patterns and kind of put them in an orderly fashion. First of all, I went through the signals and patterns, showing which ones are the strongest and why they are. And then the final video is putting all those signals and patterns into in order. The first one is your best friend signal, usually a doji followed by a big gap up. That usually creates a very consistent uptrending move after that. And go-go, as you can see, big doji, inverted hammer, gap up, still very strong to the upside. Same scenario here on AUPH. This one is your what we call your message. Even though they gapped it up and sold it off, the message was that they gapped it up. So what we look for the selling to stop, and then we can start buying. Oh, is the sound in and out for everybody? Is this an update of the major signals video program? No, not an update. The 12 major signals are the kind of the bread and butter, the meat of the signals. This is taking signals and combinations of signals. Like we know, I mean, we went through the video on the 12 major signals, which are basically showing you the doji, the piercing signal, the inverted hammer, that sort of thing. The this one is taking the best results of those signals, like a doji gap up, your best friend, or your left-right combo, which is your doji followed by a bullish engulfing signal. So essentially what we're trying to do is identify the patterns that are going to produce high profit, not only high profit, but high probability, but also high profit trades. SHOP can be bought. We bought Wix because we can see what's happening. I mean, this is where the visual of knowing there's our left-right combo, there's our uptrend breaking into new territory, and there's our target. So at least we have a much more sound analysis of what's happening based upon strong reversal signals. Long-legged doji. Then a little gap up positive. Today we were buying on positive trading because that was confirming this reversal and breaking this little downtrend and staying above the T-line. Where's our next upside? We got a wave 1, wave 2, look for a wave 3. And we also recommended ATHM. Because where did this trading occur today? Remember in the chat room today, or the last couple of days, we discussed the fact that when they gap this up, going into an obvious resistance level, just you have to go back and think what the psychology is. They're gapping this up when everybody knows this is probably the resistance level. That means there's probably going to be very good disregard for the resistance level. Usually indicates more upside. And if this broke out to more upside, what do we got? A wave 1, wave 2, going into our third wave. So I'm showing these because these are the ones that have been working, and the ones that weren't working, we closed out, and you move into something that is got the potential of working. So the more trades we can put on, and again, I'll use the money management system of, say, having 10 trades on. Well, 6 of them are patterns or steady eddies where we know what to do based upon the results of that pattern. We don't have to do too much analysis on those. That means that gives us much more time to analyze the ones that might not be working as well or needs a little bit more attention. SYMC. We can see this fry pan bottom. We can see the belt hold signal telling us they wiped out some sellers. We can see the doji sandwich that broke out through the breakout level. And what do we expect from a doji sandwich? More upside. So this just kind of allows us to put all the elements that we know that are moving in the direction that they should based upon signals that we understand. The more of those we can put into our analysis, the higher the probabilities it's going to do what we want it to do. This is 12.3.3. These are the stochastics. Are those new videos online? No, they will be soon. We're probably within the, I don't know when she'll have them ready, but they will be on soon, and we might just introduce them with a special for members, because more than likely what we're going to plan on doing is for those new people that are coming to the 2-day training session to learn the basics and learn all the kind of the background of candlesticks, that maybe in 3 or 4 weeks we'll do another weekend session where we go through all the signals and patterns on a quantified basis. Tim, no, but that's the whole point of what I did in this video, was don't have any statistical results, more just from 40 years of experience knowing which ones work the best. Okay, let's see. We did the golds. The golds were acting well, JNUG. So again, this is a sector that might now be looked at. Here is SSRI, Silver Standard, looking good. MAG, another silver, good reversal. And so when you see a pullback like this after a big steady uptrend, what's the usual result? Well, they usually move it up pretty quick to get right back into that trend. So right in here becomes a good high profit, high fast moving trade setup where the quick return can be substantial to get back up into that trading range. Okay, some of the biggies. Amazon. Still nothing here that gets real excited, except if it comes up through this level. It tells you this little wave is starting the next next uptrend. Apple just barely staying above the T-line. But a qualifying factor here was the fact that the other day when they took it way down below the T-line, they brought it right back up to the T-line. Now, when I say they brought it back up to the T-line, you got to remember, nobody or minuscule people have the T-line on their charts. So when it comes down and comes back up right smack dab to that level, that's just kind of a natural support level. Sound still comes and goes. Oh, man, I don't know what to do there. Is this any better? Got no snow in Texas. Netflix, which has been kind of dead in the water up until today, and there was nothing here but this factor that broke out tells us we might be getting ready for the next wave to the upside. So if you're trading something or trading the options, Netflix is probably a good one. Tesla, still nothing here to get excited about. And NVIDIA did finally break back to the upside. So this becomes a good-looking chart. Based upon the little buying you can see down here, lots of indecision, and then bringing it back up above the T-line. Okay, let's see. Some of the ones that look good right now. And the reason they look good is this is kind of what we want to be analyzing. Notice we have a Morningstar signal right smack dab off the 50, and then they gap it up right into this resistance level. So if we make this chart smaller, essentially what you have is a wave, a sideways wave, now something that could be, now the Morningstar signal followed by a gap up, breaking out through this resistance level. Tells us there's probably more upside. Eric, no. Remember, the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. And basically, it's like the accumulative knowledge of everybody buying and selling. So what that boils down to is, if you're going into an FOMC meeting and the market is doing what it's doing, it's because everybody knows that meeting is coming up and they're making their evaluations. So it's not like all of a sudden there's a surprise. People with a lot more research capabilities than us are making their decisions as to what they want to be doing. So when the meeting actually transpires, there really isn't any major surprise. The market's already kind of anticipated it. DVAX, I guess they announced earnings today. I'd still be a buyer of this one on positive trading, telling you the J-hook pattern is moving. TEL, there's your Morningstar signal down here. And so this is why you kind of have the advantage with the candlestick analysis because of the graphics. Let's see if I can do this with elegance. You can pretty much see they're kind of coming off a bottom here. So once you know the rules, the simple rules that we have, Morningstar signal, what do you need to see from a Morningstar signal? Bullish confirmation. What would be further bullish confirmation of the reversal signal? A close above the T-line. Well, SALT is close enough. Remember what we just said about some of the others. Notice where they gapped it up to, kind of right to that level. So you're right there. So what's that mean as far as getting in on a positive open tomorrow. Pretty much tells you they've broken this with a gap up after a Morningstar signal that bounced off the bottom of the trend channel. That tells you you're probably, if they open up positive, the probabilities are they're taking it much further. So, well, depending on, yeah, but that really hadn't gotten to the, I would have said this is your downward resistance level. I would have said this was your downward resistance level. Jason, no, usually if things are starting to oscillate wildly, I'll wait till the end of the day to see what the final decisions are. All right, let's see what else we got here. Some good-looking charts. And you can see the J-hook pattern. You can see the doji sandwich. Once again, notice how they gap this up through this level, using an implication that they aren't going to, well, KEX. Nah, it looks more like a channel to me. Yeah, it looks more like a channel. Oh, not, well, yeah, I would probably wait to see if it consolidates. Remember, anything that starts moving pretty big usually has a day of consolidation. So I'd wait for some consolidation. Okay, the biotechs appears like the small ones are moving very well. You can see your fry pan bottom. You can see your J-hook pattern. So this one I wouldn't be afraid to be buying, especially if they start trading a positive, confirming your J-hook pattern. I guess I can make this smaller. That if this is wave one, wave three could be substantial. Let's see. Yeah, Ray, I've found that the best way to analyze the yeah, I've had people trying to test candlestick signals for years, and the problem is we can see instantly more information than you can put into a formula or a scan. Another slow curve on APTO. Kind of broke this whole downtrend, makes this the 200 the next target. But what I've discovered is, you know, if you visually see the signals, again, look at our little left-right combo, right smack dab off the 200. Now we're right here. Notice what they did today on this consolidation. If they open this positive, what's it telling us? That this little kind of downtrending channel is being breached. We've got wave one, wave two, going into wave three. And MRNS, kind of a fry pan bottom, and they broke through the resistance level. Wouldn't be afraid to be buying this one. Would you worry about the hanging man on edit? No, because where does a hanging man usually occur? And your stochastics are up here. That's just, remember, just because there's a candlestick formation doesn't necessarily mean it's a signal. Stochastics up here, that tells me a different story than if stochastics are moving in this way. Let's see. Ray, yes. Um, yeah, I think the name looks familiar. I think he wanted to kind of join up with us years ago. I haven't seen too many other candlestick people recently. Steve Nissan was out there, but I haven't heard anything about him for a few years. Cool J-hook pattern. There's your classic. Fry pan bottom, J-hook pattern. That's a good looking chart. MT. Notice your kicker signal. And where did your kicker signal occur? Right smack dab off the 50-day moving average up through the T-line. That's probably a very viable trade, at least coming back up to the top of the channel, and then possibly because of the kicker signal going much higher. Remember, the kicker signal is your strongest signal in the sense that it tells you that they have kicked the investor sentiment in the opposite direction. No, probably I will be recommending cool tomorrow on a positive open. Go back to that one. If it opens positive tomorrow, we're probably going to be buying because that's definitely your classic formation. And I was doing TRTN. There's your bullish Harami. And notice, I mean, this is not a coincidence that you see a bullish Harami smack dab on the 50. Stochastics in the oversold area coming up. Wave 1, wave 2, getting ready for wave 3. Again, we're trying to find as many pieces of information as we can. Here's another one that I've got on here because of this situation. Look at the series of dojis. This is another one of the top indicators. The longer this series of dojis, which remember, if one doji tells you there's indecision, a series of dojis tells you there's greater indecision. Then you have a left-right combo. Then you have a bullish doji sandwich. I wouldn't be surprised if they aren't in the process of slingshotting this one up toward the 200-day moving average. Again, that's based on all the buy signals we saw. So here's another one that kind of had that scoop pattern, slingshot, profit taking, doji, gap up. More than likely, it could have another move the same magnitude as this going into the next wave. Although Sun seems trading in forms of dojis. I don't understand what that meant. Although Sun seems trading in yes, but notice what it was doing. Remember, there's your fry pan bottom. And what do we know about the elements of a fry pan bottom? It's usually just crappy trading. You couldn't trade it one way or the other. But once you recognize it's a fry pan bottom, then you know you're going to get some sort of results. And PDCO, J-hook pattern. So this is why we want to recognize the patterns for two reasons. First, it gives you a high probability of the trade's going to move in the right direction, number one. And number two, it's usually going to have a magnitude of movement that's much greater than just an uptrending stock. So here what's the prerequisite for a J-hook? Strong price move. What do we see in a J-hook? Usually a pullback, and then the next wave is usually the same magnitude as this, which means if this was a strong price move and you didn't catch this from the morning star signal over here, at least you know what your parameters are from this point, where you can already calculate what your rate of return might be. We do this one. showed this one for a very specific reason. This is one of the statistics that I don't have anything definite on, but just my own trading experience. If you see an inverted hammer followed by bullish confirmation, my estimate is 95% or greater. You're going to see an uptrend from there. Left-right combos and a doji followed the next by a bullish or bearish engulfing. Yes. That left is kind of the little indecisive jab. Let's see, did we do that one? We did that one. I'm going backwards. SAEX. This one had a bullish engulfing, then what I call a stutter step. Notice how it pulled back. Notice what it did the last 3 days, another morning star signal. And where did it do this? Right here, this downtrending resistance level. So if this was backing off, it'd probably be moving right back down into this trend. The fact that they came back up with another signal tells you if they start trading this positive, it tells you the stutter step is over. They're going to continue to the upside. So where's your next target? The 50. And then you see what it does from that level. An LNTH, J-hook pattern. Again, why do you want to stay with a J-hook pattern? Kind of see kind of a fry pan bottom. Because we know the magnitude of this move, which looked like almost a 45% move, going from 9 to 14. I guess that's 55, 60%. Now you've got a J-hook pattern. And once again, notice where this started selling off. Your bearish engulfing signal. And the nature of the pullback would have told you, get ready for the next move because they weren't pulling this back with any great decisiveness. If they break this out through this level, wave 1 and wave 3, this should take you up into about the $18 range. Kind of a fry pan bottom breakout on Logi. You can be buying this one on positive trading. Bob Evans. There's your fry pan bottom. And notice what this signal right here did. Bounced off the 50, number one. That was obvious. 2, you got kind of a bullish engulfing belt hold type signal. So what did it tell you down here? They took out a lot of sellers and brought it back up. So there's a lot of sellers out of the way. And now you've got a fry pan bottom that's in the breakout stage. Probably indicates that you've got the potential of going up to the top of this, to the trading. Again, that may or may not happen, but at least you have a target based upon a strong chart pattern. So anytime we see something like this, the doji big move to the upside, we get a statistical probability that there's going to be a lot more upside. I say statistical probability. I would probably just better say that as a probability that it's going to be a lot more upside. Because of this right here. The reason, let's see, can you expect a J-hook pattern now? No, you can't expect that. But the classic pattern, and I can't remember which one it was. Yeah. The classic pattern is a fry pan bottom breakout. And what do we expect from a fry pan bottom breakout? A very strong price move. And if we see a pullback, indecisive, what's that setting up for? A J-hook pattern. And what's the prerequisite for a J-hook pattern? A very strong price move. So was it cool? Oh, okay. Yeah, so there's your fry pan bottom. There's your pullback. And there's your J-hook pattern. Again, what's a prerequisite for a J-hook pattern? Very strong price move. So this is what we call the classic. Big fry pan bottom breakout. Now a J-hook pattern. DVAX, if it opens positive, you can be buying it, because you can see where the dojis occurred, right smack dab here on the T-line. Oh, no. Doesn't matter. I mean, that's shallow. Yeah. All you really want to see in a fry pan bottom is that it's a slow rounding. Yeah, this is more of your J-hook type pattern. Okay, so not only on the short side, but you want to, oh, this one, got to figure this out. Well, that's not good. So what's the opposite of a fry pan bottom? A dumpling top. What do we expect coming out of a dumpling top? That kind of slingshot effect to the downside, just like we expect coming out of the saucepan bottom. So somebody asked the other day, what was the pattern or what was the signal that told you to short BAS? And it was the fact that we had this big dumpling top, and notice what it was doing. Every time they took it up, they failed at the T-line. Then they started breaking it down. And where did they start breaking it down? Right about in the same area that it supported over here. That tells me you kind of stay short now with the prospect that they could be selling this off hard on any given day. We're short Kindred. There's your hanging man Harami. And where did it occur? Right smack dab on the 200. What happened the next day? Told you there was bearish confirmation that they were going to fail at the 200. Now they're pulling it back with a close below the T-line. Where's your next likely target? Either fill in the gap, and if they get that close to the 50, more than likely they'll take it to the 50. So how long do we stay short on this? As long as we don't see a buy signal and a close back up above the T-line. Again, this is not rocket science. This is just kind of taking advantage of the patterns that have been consistent for hundreds of years. We're still short EAT because notice when they took this one up, they failed again. There was that hanging man type signal failure, and this is where you kind of observe the obvious. See what the trend was doing, and then they started selling it off back below the T-line. How long do you stay short on this one? As long as they can't close it back up above the T-line. Let's see. ESW. Kind of your evening star, double top, close below the T-line. One that you can just stay short. I'm going to make this smaller. So what's your kind of your target on this one? Well, we can see you're stuck in a downtrend. So if you drew a line right through there, a parallel line, and it really wouldn't matter. Kind of a parallel line would take you down into this territory. So what we're looking for are the things that get big slams. Look at your big bearish engulfing. They tried to bring it back up, took it down hard again. What happened when they took it down this time? Pretty much broke this area, telling you you're in a downtrend until you see a buy signal. Now, how long do you stay short? Well, we know the warning signs for when a reversal could be coming about. When you get in the oversold area, you start moving too far away from the T-line. So what's your logical spot right now for if you were short or you would cover your short? Logical spot is they should not trade back up above the open, because if there's enough strength in the oversold area that far away from the T-line, if they can bring it up through the open of the previous day, that's telling you the buyers are stepping in at that level. Again, there's that dumpling top breakdown. This candle right here broke down through the support level right there. Telling you to stay short until you see a buy signal. So when you see something setting up, you can start shorting it Knowing that you're not in the oversold area, where's your first likely target on this one? I would suspect down here at the 50. DHO, another example of when you see an uptrend and they do a doji gap down, remember that's your best friend bearish, telling you stay short until you see a buy signal. Let's see, did I do DKS? That looks familiar. Yeah, there's your kind of your doji gap down. First target is right here, which you're almost to, but you probably just stay short until you see a buy signal on this one. The retailers are getting hit. Notice how when they started bringing up the retailers, they failed Macy's right here. And notice what happened when they fell through the 50, came up, 50 acted as resistance. You can probably be shorting this one with the anticipation that it's going to head to this level first, then possibly down into this downtrend, meaning they could take this much lower. It would be a blue ice failure, kind of, except there's nothing down here for a target other than the lows. So whether you want to call it a blue ice failure or not, it doesn't really matter. It's more than likely heading lower. So here's another situation where IIVI, downtrend, stabilized in here. Now look at the little slow curve. Remember what we kind of anticipate from a slow curve? Slow curve is one of the, I don't know whether I've got that as number 2 as far as your profitability, but that's usually kind of a instigator for a hard move. There's your fry pan bottom breakout to the upside. And SYNA, shooting star. The bigger the signal, the more compelling that the uptrend is pretty much over. Notice when they took it back up right to the 200 again. There's your evening star or your shooting star failure. And notice how so this is a situation where I'll gladly take my profits on a short position when they start showing buying, because where do you think they're moving to? Back up to the T-line. Once they get to the T-line, you can always re-short if it shows they've failed. Now you got kind of a little bearish J-hook, so this one can be shorted on any weakness with a wave 1, wave 2, wave 3 prospect. Yeah, you're in the oversold area, but remember, we're not buying or selling stochastics. We're still buying the signals or patterns. The stochastics just kind of give us an idea of where we are. So when we're up closer to the overbought area and we see sell signals, that's a little bit more compelling. So, but if we know what our patterns tell us, wave 1, wave 2, wave 3, our stochastics may be oversold for the next 2 months or however long. Okay, some very good good chart patterns out there. As long as you can visually see what they're doing and you know that what the results are from this type of pattern, at least you're putting yourself in situations where the probabilities are much stronger that you're going to be in the right place at the right time. And for some reason, no, it doesn't look so compelling on this chart. But that's a nice fry pan bottom with a breakout. Notice where it broke out right here at the 200. So I would suspect there's still a lot more upside in this one. Okay, that's about all I got for tonight. There's still lots of good trades out there, even though the market itself is moving sideways. But as long as they aren't backing it off, meaning right now, the fact that they're still staying up here, you just have to kind of ask yourself, what's the investor sentiment? Is it getting bearish, or is it just kind of sideways in an up market? And with the idea or the visual idea that when they're backing it off, it's very indecisive, that should give us a warning or at least a prelude to the fact that they might be ready to take it back up. And they aren't seeing any real selling going on here in the NASDAQ. Notice when they brought it back, They brought it back up above the T-line, giving us this little J-hook type pattern. The stochastics on the Dow, well, it tells us we're up in the overbought area, but you can see how they've pulled back the stochastics, and they're not really moving the market. So that, to me, is like coiling the spring, where they're pulling it back, and then, bam, they can take it back up pretty hard. Okay, are there any general questions on candlesticks? Yeah, hold on to your individual ones. EXTR, no message there. The only message you're really getting is that there's brought it back up above the T-line. And again, what's our number one criteria when we see an uptrend? As long as they got it above the T-line, they're going to stay in progress. Carol, usually on your chart somewhere, they'll show, they'll have a where you can customize your charts, and or they'll give you a list of criteria or indicators you want to put on. And you scroll down until you find, what trading platform are you doing? On this one, Jason, well, pretty much told you. Remember, which ones were we seeing in FN? Notice how they gapped this one up, coming out of a fry pan bottom, and then first selling. They've never stopped the selling, so that's why if you still want to use Thinkorswim, somebody should be able to help you figure out how to get the stochastics on there. I don't use the 34 Anita very much, just because I can find enough trades using the the 3, 8, 20, and 200. I don't get too concerned as long as it doesn't go the wrong way. But this is why I have my mandatory let's say 10 positions for the portfolio. Let's say I've got 10 positions on. Now all of a sudden I find one that just looks great, extremely high probability. And I can calculate that from 3.5 to 8.5, 5 points, that this could move up into the $12 range. From here, that means that's a 50% return. So I can go back and say, all right, does that look better than this? Very slow. I'll just say, this one's not doing as great as I thought. I'll take this money and move it over into the other position. John, no, that might be Rick's technique. But Rick has a completely different trading style. His is more of a scalping short term. Do you have any trading plan that you check off? The first thing I do, Ron, when I do my scans at night is I'm trying to find the ones that look good. I don't spend a whole lot of time analyzing them. I just look at it real quick and say, is this something I would be buying? If I looked at this chart, said, J-hook pattern, that's about as much time as I get. I'd click on it and put it in my what I call my basket. Go back and look at it. Then I can go back and look at them better to see which ones have had a chart pattern. If I see something like this, see, did we see something like this? We did. The MTL. See something like this? I want to see what it's doing the next day to be buying, because what do we expect on this type of big move? Probably something like this. Or the best friend, or a kicker signal. Which one was it? Kicker signal, an MT. Now, as I go through the charts, I may have 30 or 40 of them to look at. I can go through those 30 and 40. I'll narrow it down to 16 of those are the best, and I'll go back, look at those, see which 8 are the best, and see which 4 are the best, and then see which is one or the 2 of the best of that, based upon, again, the kind of quantitative analysis of which signals are the strongest. Now, if I saw a kicker signal like up here versus a kicker signal right off the 50, that gives me a little bit more credibility. That's where they've bounced it. Jason, the 3T line becomes much more significant the further away you move from the T line. So if I see something where I've moved a good distance away from the T line, I'll start watching the 3T line. So if I saw there's a hanging man potential, the only reason I wouldn't consider it a hanging man is because we're not in the overbought area. Just consolidation day. But if it closed back below the 3T line after a hanging man type signal, what's my next conclusion? It's probably going to move back to test the T line. Somebody said, why do I use a mixture of the 50, the 200, and the 20 are simple moving averages? Because the major benefit we have with candlestick analysis is we can see graphically what's going on in investor sentiment immediately at those important technical levels. They're important technical levels because every major money manager around the world uses those moving averages to make decisions about their portfolio. We have the advantage of seeing what those decisions are immediately at those levels. The 3T line and the T line are just, they work well, the 8 and the 8 exponential and the 3 exponential. That's just, those seem to be work very well. Okay, I guess with that, Jim, go ahead and do the double line. There are going to be times, and go ahead and do the next double line. The candles on Mobley wouldn't have given us a real strong warning. You can see it was starting to do a fry pan bottom. There was another one the other day that I forget what it was, but it gapped way up, and there wouldn't have been any inclination that the buyers had come in yet. Silver Wheaton, you can get ready to buy this one on positive trading tomorrow after your dojis, little inverted hammer type doji, bullish confirmation. Positive open tomorrow would give you a bullish doji sandwich breakout. AMD, you stay long on this one with the prospect right now that it's going back to the top of the trend channel. Crude oil broke this sideways trading range. It's still heading down. So right now, I could go into a long dissertation of why I don't think crude oil is going to be a major factor for quite a few years based upon the fields that they've been discovering in the United States here recently. Palo Alto, no. Just because it's gapped down doesn't mean it's going to gap back up. So you can't anticipate an island reversal until you see the island reversal. So if it did gap up here and trade up, yes, then you could consider it an island reversal, but you can't expect that's what it's going to do. NAK, I don't know whether it was trading somewhere after hours, but I wouldn't be a buyer yet until you see a buy signal and a close back up above the T line. Nothing there yet. And TECK, that one I'd be more apt to buy, with the first target being up here at the 50. Second target would be probably along the tops here. So you can pretty much draw a line through the tops and pretty much draw a parallel line through the bottoms. So that's part of your trend channel that you could expect. At least look for the target. Now, is it going to get up there? Who knows? But at least it looks like that if it broke through the 50, then you know what your next potential target would be, the top of that channel. Whoops, did something wrong here. LJPC, J-hook pattern, I'd be a buyer of it if it came up through this level. Want to see it get a little bit more strength. CASC, very slow curve. You can buy this on positive trading because it has broken kind of a, notice how you've got kind of a fry pan bottom with a dimple right here. And the dimple tells you this move from here to here is usually equivalent to this move from here to here, and you're right at that level. So you've got a good probability that if it starts trading higher, a couple things are happening. You're coming out of the slow curve, and it's telling you that the 50 is not acting as a resistance anymore. NKTR, the bigger the signal. Notice all the things you can add to your analysis on this. Big, huge signal, and where did it close? Right smack dab on the 200. They started taking profits. Where did they take profits to? Right smack dab to the T-line. Came back up through. So what do you got here? A bobble with a big, huge move. More than likely, you're going to remain in this 45 degree. Baxter, nice steady eddy. All you can do right now is stay long as it stays above the T-line. AMKR, nice fry pan bottom. And notice when it broke out through the 50, it did it with your McMuffin, Morningstar signal. There's kind of a double doji sandwich. You just stay long on this one. Right now, if you're in a fry pan bottom, very simple rule. You stay long until you see a sell signal and a close back below the T-line. AMAT, you can see you're in a steady eddy, but notice the curvature now. You're starting to see a little bit of exuberance. So you pretty much want to be ready to take profits up here, seeing that exuberance up in this area. And blue, whoops, doing this slowly. Blue, J-hook pattern, kind of a fry pan bottom, J-hook. Notice your doji inverted hammer, bullish confirmation. I would stay long on this one. No, it's not a hanging man because you're not even in the overbought area. All that is a consolidation day. So I would suspect as long as they stay above the T-line, you're still in an uptrend. Venda, nothing wildly exciting here. You did have a big hammer type signal. I'd probably be more interested once it broke out through this level, but right now there's really nothing exciting about that chart. OCUL, same scenario. Nothing exciting. You don't have any bullish pressure or bearish pressure. I'd be someplace else. And Momo, breakout, consolidation. Now notice what happened after this big down day. Kind of a bullish harami, bullish confirmation. You could be buying this one on positive trading tomorrow. Then where would be your likely stop? Well, if this opened positive tomorrow, telling me the buying's there. It shouldn't come back down below the open of today. Qs are acting well, just like the NASDAQ, staying up above the T-line. AK Steel, nothing here. Wouldn't be long or short. Bank of America, wouldn't be in this one either. It's just not a very exciting stock, especially for a trader. It's just not a whole lot there. But a lot of the big financials are kind of stuck sideways, as we can see in Goldman, probably backing off, maybe coming back down to the 50. NCR, this was very simple. This is why you want to know what their signals are telling you. You had kind of a little bearish engulfing signal right here on the 50, or on the T-line. That told you immediately after a series of dojis and stochastics starting to head down, it had to open positive. If you held on to it, it had to open positive and trade positive to stay in it. The fact that they gapped it down would have had me out immediately. Right now, you could be going short on this one. SYK, nice little J-hook pattern. You could be buying this one on positive trading tomorrow, telling you they've broken this level going into a new wave. United Airlines, you could be shorting the airlines. They're all selling off. United is selling off. Southwest also been selling off. So I'd be short the airlines right now. PIP, nothing there that you can get your hands on or get your teeth into. I don't know what the volume is on a dollar stock, but it needs to be pretty hefty. If I was looking to buy this one, I'd wait for it to come up through this level. AMN is doing the classic fry pan bottom J-hook pattern. You can be buying this one. I'm kind of watching for this little trend line right here. See if they can get it up through that level. JB, yeah, usually I don't pay any attention to what's going on after hours on this chart. I can't see. I think they came out with an announcement this afternoon. They were trading right down in this range because of putting out new stock. So if I was long this one, I'd have my stop right here at the open of today. Because if they have enough selling pressure to take it down through there, they're probably bringing it back to the T-line. We did nugget, didn't quite get up through the T-line, but can be bought on positive trading tomorrow. Pulte Group. Just stay long until you see a sell signal and a close below the T-line. Polaris, nothing. They got up here to the breakout level, which meant they needed to break out. You got a bearish Harami, which tells you you're still stuck in this sideways trend. And Amazon, nothing yet. Needs to break out into new territory. BCRX, did they come out with earnings tonight? If they open this lower after the hanging man up here in the overbought area, that means they're probably bringing it back down to test the T-line. Boeing, that one you should be out of. There was your left-right combo taking you down through the 50. You shouldn't be back in it until they can get it back up above the T-line. Big breakout on this one. Yeah, so that goes back to our analysis. If they open it lower, you take profits, but then you could always buy it back if they bring it right back up through the high or the close of the previous day. If they open it positive, then you put your stop right here at this close. They shouldn't bring it back down through that level. XIV, just stay long. CNCE, stay long, as long as it stays in this 45 degree. We did Bank of America, RNVA. Nothing here. It broke out. This was the candle that told you they were trying to break out. When they closed it more than halfway down that candle, that told you the bears are still in control. I wouldn't be in this one long. You can't be in it short because it's below $5, but I wouldn't be in it right now. OCRX, big breakout, consolidation, little doji harami, which makes it very simple. If they open this one positive, that means they're still taking it up. If they open it lower, it means they're coming back. I'd probably come out of the trade and wait to see if it's going to bounce on the T-line. UCTT was acting well. Another one you could be buying with the anticipation your next target is at the top of the channel. Micron, you just stay long. Nothing wildly exciting except it's in a slow, steady uptrend. U.S. Steel, nothing here yet. If you're short, it needs to stay below the T-line. If it opens positive tomorrow, you close out the position. And CNAT, another one that's not real wildly exciting. You're still stuck sideways. I'd be someplace else on this one. There's just no strength to it. And CATB, this one needed to open positive. The fact that they've opened it down here tells me if they open it lower, you close it out. It's lost whatever momentum that it had. Not really a J-hook. Just, yeah, J-hook usually follows a very strong uptrend. This is just more kind of a waffling uptrend. And Freeport, nothing here yet either. If I was short, I'd probably be out of the short position, but I wouldn't be long on this one right now. The 13 calls, yeah, I'd probably be more aggressive if it opened positive tomorrow above the T-line. And Twilio broke out through this level. It's still not a very exciting trender. You're going this way. If you like it, you can be buying it, but it wouldn't be my first choice as far as a big price move. And MXPT, your best friend, stay long. Alaska Air, that's the stronger of quite a few of them. They're bullish engulfing right off the 50. I would stay long on this one. It also needs to open positive tomorrow, though. VRX, nothing of great consequence here, other than if you'd been short, you should have covered the short position. I definitely wouldn't be going long on this one. And Kara, if you didn't come out here, should have come out today. Looks like it might be on a support level, trend channel, but that would definitely need to see some positive trading tomorrow. And VICL, that's a nice little slow curve breakout. You can be buying this one. Make sure your volume is strong. NVIDIA, you can be buying this one with your first target up here at the 50. You can see how they've, let's make this big enough where we can see it. See where the doji type days and then confirmation up above the T-line. And yes, you can stay short or go short on American with the idea that if this is your downtrending channel, kind of targeting the 200-day moving average. And CFMS, bullish harami. If you were buying here, you could have been buying on this day, and I'd stay long as it stays above the T-line. ALB, there's your breakout. There's your consolidation. And today they did a left-right combo. You can still be buying this one on positive trading from here. Worthington, Nothing wildly exciting. You do have a fry pan bottom, kind of J-hook. If you're buying, obviously you need to see it break out through this level. There is a gap here and there is a gap here. So you do have some upside potential. It's just not massive upside potential. When you say wait for a sell signal and a close below the T-line, you mean after the sell signal, you need a close below the T-line as confirmation of the sell signal? Yes. Wouldn't a sell signal and merely trading below the T-line the following day be enough to get out? Or if you have a sell signal like right here, where you had a sell signal and a close below the T-line in one day. Now, if you're away from the T-line, I see a bearish Harami hanging man start trading lower. I'm going to close it out with the anticipation it's going to come back to the T-line. But I don't know if it's going to stop there or not. And KEX. You've got your Morningstar signal. You didn't really have confirmation. I wouldn't be a strong buyer. This one would have to open positive and trade positive, and then you have to watch to see if it gets through this downtrending channel. And ROX, you can be buying this one. Just make sure your volume's hefty. Okay. Nothing major yet on the markets itself. The Dow not going anywhere. But again, the kind of the bullish confirmation is over here in the NASDAQ, where you can see they're not selling it off. All right, so with that, everybody have a good evening. We will see you bright and early in the chat rooms. We'll see you then.